What's up, everyone? It's Thomas with Real Broker here in St. Augustine, Florida. And today I have a very special show for you today. I'm interviewing Eddie Creamer, who is the St. Johns County Property Appraiser. He's the go-to guy when it comes down to property taxes. Super excited about this today. So if you do have any questions, leave them in the comments below. We'll make sure that they'll get answered. But today we're going to go through pretty much any question that you have about property taxes with the man, the myth, the legend, Eddie Creamer. Eddie, how you doing today?
I'm good, Thomas. How are you? Thanks for having me this morning.
I'm doing wonderful. I'm super excited that you agreed to do this. First of all, I know a lot of people would probably stray away from doing something like this, but I'm really looking forward to diving deep into the property taxes here today.
Yeah, absolutely. It's my pleasure. It's the more information we can get out to the public, the more education we can do, the better informed the public is, the better decisions they can make, and the more they know how our office works, but also how our office ties into the government in general, county government, how funding is done, how revenues are produced, et cetera. So it's very important for us to get our message out.
For sure. And we're going to cover essentially how your office, how they look at taxes, how they assess taxes. We're going to also look at some exemptions. And then at the end, we're also going to cover, how can you fight your property taxes when they do go up? Mm-hmm. So I kind of want to let you kind of start off and just tell us a little bit about yourself. When did you become the St. Johns County Property Appraiser? How long have you been living here, Eddie? Just tell us a little bit more.
Sure. Yeah, I am actually a third-generation Floridian. I grew up in the Florida Panhandle, a little tiny town called Port St. Joe on the coast. When I left Port St. Joe in 1976, the population was 5,000. And today, the population of Port St. Joe is still 5,000. So
Wow.
The growth of Florida hasn't found that.
Yeah.
I'm an accountant by education. My career was in banking for about 35 years.
Okay.
And when I left banking, I ran for property appraiser, and I've been the St. Johns County Property Appraiser for the past 6 years. I'm 2 years into my second term as property appraiser.
Okay, very cool. And do you like being the property appraiser here in St. Johns County? Does that come with its own hassles?
No, I absolutely love being the property appraiser. This has been 35 years in banking was great. It was a super career. I learned a lot. Mm-hmm. Property appraiser has just been like, I wish I'd have done it 35 years ago. It's
Really?
It's a very important job in St. Johns County, but also in the state of Florida. And what we do and how we do it is very exciting. It's fascinating. I learn something new every day. It was refreshing for me because going from banking to property appraiser, it was totally new to me. Mm-hmm. So it was a new challenge and a new way to learn. And I've always believed that government can be efficient. Government can be responsive. I've always heard the argument in the private sector, well, you can't do that in government, it's different. And that's not true. Government is not different. It's all about a product, a service, and dealing with customers within rules and guidelines that are set out, mm-hmm. and that's what we do.
For sure, and that's something that I think that's definitely a conception a lot of people have, that when it comes down to the government getting stuff done, a lot of people don't have faith, that it's actually going to get done in the right way for the right cost and the right timeline. That's a big problem and that's a public perception that we have with our local government and also our federal government as well, right?
That's correct. Yeah, and sometimes the perception is true. Mm-hmm. And, sometimes, again, as I said, the answer is, well, you can't do that because it's government, and that absolutely is not true.
Yeah. Okay. So you're more or less taking like a private company approach to the St. Johns County Property Appraiser Office.
That's correct.
Beautiful. That's what I like to hear.
Yeah.
Well, Eddie, so let's get right into it. Let's get into what these people want to see. Tell me a little bit about what your office day-to-day is, what do they get into, and why the Property Tax Appraiser's Office is needed.
Sure. So in Florida, by Constitution, there's 5 constitutional officers in each county. Mm-hmm. And the Florida Constitution was a home rule, or is a home rule constitution, meaning that we are governed best when we're governed closely. Okay. And so these 5 constitutional officers are elected in each county with specific responsibilities. And in our case, the property appraiser, the responsibility of my office is to create the tax roll. And the tax roll is basically the valuation of the county. All real property, all personal tangible property is valued. Mm-hmm. All the exemptions are administered, the caps are administered and calculated by the office, which creates the overall tax roll, mm-hmm. which is how the county government agencies or taxing authorities establish their millage rates, which ultimately translates into your property taxes every year.
Gotcha. And just a quick question on that. If we look at it as like a business, a St. Johns County, does that help us with like getting a loan from the state? You know, like how well we're doing as a county in terms of tax revenue and everything like that, or is that just is there a marker at all, like in terms of like, oh, St. Johns County collects this much tax revenue, so they're more able to pay back, you know, any type of loans that the state would give them? Is that
No, that's not necessarily the case.
Okay.
Normally, if a government entity borrows, they're not borrowing from the state, if you will.
Okay.
They're borrowing from other financial entities.
Okay.
And so the revenue, the fiscal soundness of that entity is certainly going to play into how much they can borrow and the effective interest rates at what they can borrow. So counties, much like businesses, have a rating. And that rating governs their ability to obtain credit.
Okay.
Counties in Florida don't borrow from the state. Actually, counties in Florida fund the state.
Okay,
right?
that makes sense, yeah.
So property taxes generally stay local, but then sales taxes that are collected locally are sent back to Tallahassee and redistributed among the counties.
Okay, no, that makes total sense. All right. So how, when you're looking at, you know, appraising a property in your office in general, how are you guys going about doing those duties? You know, like, is it just something that you're just throwing out a number? You know, you just want, the county needs this much money and you guys want it, so you're going to put a number out there, or you guys have a process, right?
Yeah, and that's absolutely not the case.
Yeah.
We have a process. So we appraise or we assess all real property in the county, and we appraise property to much the same extent as an appraiser would appraise. We consider the three methods of value, or the three determinants of value: the market, the income, and the cost. We consider highest, best use of properties and that sort of thing. The difference in how we do it, and say an independent fee appraiser who's appraising one property for one transaction, is we do it in mass, as we're valuing about 170,000 parcels a year right now.
Wow.
So Florida is a market value state, which means state statutes say that we value according to market or just market value. And in St. Johns County, we have so many sales occurring. We get good indications of the valuations of property in our county based on sales. So the way our office works as a constitutional office, we're independent. I am actually elected to represent the property owner. I don't work for the county. I don't answer to the county. I
Gotcha.
answer to the property owners.
Okay.
So I am their advocate or representative in taxation as it relates to valuation. Our office is, oversight comes from the Florida Department of Revenue, not from the county. Our budgets are approved by the Florida Department of Revenue, so it's a separate independent function. So what we do every year is we assess all the real property in the county based on sales. We use cost data as well.
Okay.
And on commercial properties, we use the income approach in many cases, just as you would as an independent appraiser.
Yeah.
And throughout the year, that data is gathered. Each time a sale occurs in the county, that deed is recorded at the clerk of the court's office.
Yeah.
But that deed ultimately comes to our office because we maintain the ownership records.
Gotcha.
And the ownership records are for taxation purposes. So we record that ownership and record that change, that value, and we begin to build a database of values that's applied to the properties for valuation purposes. So what we come up with every year is a just market value. We divide the county into 5 different geographic regions. Inside those regions, we may divide that region into 8 to 12 different neighborhoods so that we're getting homogeneous properties in a neighborhood, so that we're not assessing $1 million properties and $500,000 properties to $300,000 in the same neighborhood.
Yeah.
And so that sales data is collected into those neighborhoods, and we're coming up with square foot rates, land rates, acreage rates, et cetera, to apply to ultimately get the tax roll. And so just market value is the only number that we come up with.
Yeah.
If you look at your trim notice or you look at your property on our website, you'll see 3 values. You see just market, assessed, and taxable. But the only number that we are creating, if you will, is just market value or fair market value.
Okay, because that's more or less the triggering point of when you guys are reassessing taxes, right?
Yeah, Florida, well, a lot of people think, well, you're only going to reassess my property when it sells. Right? Florida's a January 1st assessment state, and that means we reassess properties every year as of January 1st based on use, ownership, and condition. Sales that are recorded over the previous year help in that assessment process. Updated cost information for construction, the cost of roofing, the cost of other materials, that's all considered as well. So everything gets reassessed as of January 1st.
Okay, gotcha. And you mentioned that there's 170,000, I guess, sales or reassessments that you do every year, or 170, sorry, correct me.
170,000 parcels that we assess.
Parcels, okay, yeah.
In the
So
counties, residential, commercial, and tangible.
So you can't be doing that all yourself, right? You got to be having like a team here, right? Or is that all you?
Oh, no, it's not on me.
Yeah,
No,
okay. I'm about to say, you're a busy man if that's the case.
We have, our office is divided up into a customer service area, and that customer service area maintains all of our exemptions. The homestead, the veterans, all of those are maintained in that customer service area. Any customer questions or inquiries come through that area, applications. Then we have a GIS area, Geographic Information Systems, which does all the mapping for the county. And then we have obviously an IT area, and we have a deeds department that records the ownership. We have a tangible personal property department. And we have a tax roll administration, and then we have an appraisal department.
Okay.
And that appraisal department is divided up between residential appraisal and commercial appraisal. So houses and businesses.
So quite a big operation that we got going here.
We have 40 employees in the office.
Yeah.
And we're kind of 6 years ago when I took office, we had 55 employees. And today we have 40 employees.
Yeah.
And so we are very keen to using technology to leverage the talent of the people we have to do the function that we have to do.
Yeah, okay. No, I like that a lot. And then I know you touched a little bit on like the valuation process of like an individual parcel and how it's broken into neighborhoods and everything. You know, what if you're buying a home today, if you're selling a home, could you go into that valuation process? Like, so if you're buying a home today, what's one of those things that you should be looking out for next year?
Yeah. Well, when you buy a home, anytime, you're going to look at a lot of things. What's my payment going to be? You know, how much is insurance going to cost? Can I get it insured depending on where it is? The other thing that's really critical that you should be looking at is what's my property taxes going to be, right?
Yes, sir.
And a lot of people go into the transaction and they look at the previous owner's property taxes and they think that's what my property taxes are going to be, and that's not the case.
Yeah.
Florida being a January 1st assessment state, meaning as of January 1st, it's ownership, use, and condition. One of the keys is ownership. So if you own the property January 1st, the taxes for that year are yours. This taxation is kind of in arrears, right?
Yes.
So the tax bill that you got in November of this year was for this year. And that whole process began January 1st of this year and got you to that point. So in June of this year, if you sell your home, say to me, this year's taxes are yours. January 1st of next year are my taxes. Okay.
Gotcha.
Now, normally the significant change in property taxes from owner to owner is not a result of revaluation because you know what you paid for the home, so you have a good idea of what the just market value is of the home.
Yes.
Normally the change in property taxes is because the previous owner or the seller had homestead exemption or another type of exemption. Maybe had owned the home for a longer period of time and had built up a big amount of Save Our Homes Deferred.
Yeah.
And all of that is removed because that goes with the previous owner.
Yeah.
So the next year, not only do you face the reassessment, which you would have whether the house sold or not, if there was deferred, if there were caps, if there were exemptions, those were removed as well. And that's where you see the biggest increase year over year in taxes. You know, probably the number one phone call I get every year during trim is, why did my taxes double?
Yeah, and that's definitely something that we've seen these past 2 years, right? Because prices, you know, it's based off of just market value, and prices have gone up pretty significantly these past 2 years. So what's that conversation like when someone calls you?
Well, when somebody calls and says, my taxes doubled,
Yeah.
I already know the answer before I retrieve their property, because in Florida, your taxes can't double.
Yeah.
If you're homesteaded in Florida, you have a 3% cap on your taxable value. If it's non-homestead property, it's a 10% cap every year, so it can't double.
Yeah.
So when they ask me that question, I know they purchased their house during the previous year.
Yeah.
I pretty much know that the previous owner had homestead exemption. They had probably owned it for a number of years and could have had $300,000 of deferred that they took with them to another homestead. So all of that's removed. And that's why the taxes go up the following year. So as a purchaser, you should be estimating your taxes and not based on last year's taxes. You can go to our website, sjcpa.us. You can pull up the property, and right on the top of the page, there's a button that says Estimate My Taxes.
Yeah.
And you can click on that button, and what I tell people is plug in the value that you paid for the house. And if you're going to get homestead exemption, click that button. And it'll calculate what your taxes, it will give you a good estimate of what your taxes will be about next year.
A good ballpark, which is something that most people, and that's the problem, especially if you're using maybe an out-of-state lender, that they don't know that taxes are paid in arrears, and it's based off of just market value. So they're giving the taxes based off of what the owner had previously, right? So the owner previously they bought the house 15 years ago and they homesteaded it, so they're capped at 3% year over year over year. So their taxes are nothing compared to what it is today, right?
Yeah, absolutely. And I can kind of venture down this road because I am a reformed banker. Mortgage escrow companies tend to estimate your taxes based on what they were last year. And they're fine with doing that because they know they're going to catch it up next year anyway. And that's fine for the mortgage company. It's not fine for you because you're going to get a real big payment increase over that. And so we always encourage people, even if they can't force their escrow company to estimate what they're going to be, at least put that amount in savings every month or be prepared next year, because when the taxes are a lot higher next year, if you're being escrowed, the escrow company, the mortgage servicer, is going to pay your taxes, and then they're going to recover that amount plus usually 10% over the first year, and they're going to adjust your escrow to be back on track. So that can be a significant, if you were under by $2,000 or $3,000, you're going to end up being hit for almost twice that the first year to get them back on track, get the escrow company back on track.
Yeah, and that's not a phone call. I mean, I'm sure you did it in your time there. It's not a phone call you want to make, right?
No, not a phone call you want to get. And again, absolutely.
For sure. And you talked about, you touched on the exemptions a little bit. And now a lot of people know the homestead exemption, but there's a ton of other exemptions. And that's not just for the county, right? That's the entire state of Florida, correct?
Yeah, exemptions are set by the state of Florida. In fact, interestingly enough, and I didn't realize this till I became the property appraiser, homestead exemption is constitutional in Florida. Yeah. It's not just a statute that the legislature passed. It is a constitutional part of the Florida Constitution. So homestead exemption, which is kind of the gateway exemption, most other exemptions, except I think one small veterans exemption, you must have homestead to get it.
Okay.
And then there are low-income senior exemptions, there are disability exemptions, there are veterans exemptions. The veterans exemptions are mainly around disability and especially combat-related disability for veterans.
Yeah.
There's some first responder exemptions, but they are all generally homestead is first.
Yeah.
And once you have homestead, the homestead is the gateway to those other exemptions.
So one thing, I work with a lot of people that are retiring to Florida, and you mentioned the senior exemption. Now, a lot of people that are retired, they're on a fixed income. They don't necessarily qualify for that senior exemption automatically, right? Yeah,
Florida, it's a low-income senior exemption.
Okay.
And so the income limits are set by the Florida Department of Revenue.
Okay. And
they're changed every year. They're upped a little bit by the cost of living index. And it's a pretty low adjusted gross income bar. This year it was, this is not going to be exact number, but it'll be a new number next year. It was about $32,700 adjusted gross for the household.
For the household.
It'll go up next year probably 7 or 8% because that looks like what the CPI is going to be.
Yeah.
And then there's a value limitation on the property. It can't be assessed at more than $250,000.
Gotcha.
If you're living in St. Johns County, that rules out a lot of folks.
Yeah, for sure.
Yeah.
So if it's valued above $250,000, so if it's a $300,000 house, you pretty much can't qualify for it.
You don't qualify for the low-income senior, yeah.
Okay, gotcha.
Now, part of that, too, Florida's homestead exemption is very, very generous. Probably, if not the most generous, one of the most generous in the United States.
Yeah.
Because not only do you get the $50,000 exemption or deduction for taxes, you get a 3% cap.
Yeah.
And property values in our county last year were up 36%.
Yeah, and that's
So
a
if you're
huge,
homesteaded, you had a 3% cap. That's huge.
and if you weren't homesteaded, that would have been 10%.
You had a 10% cap.
So if you had $1,000 tax bill, it went to $1,100 the next year.
Correct. Well, the value went up, yeah.
Yeah.
So the cap is on the value, the
Okay.
taxable value.
Gotcha.
Now, the millage rates that the taxing authority set can affect your taxes, but the assessment limitation caps are based on the value
Okay.
of the property.
So essentially, if you're
So generally, everything else staying equal, 10% is going to go up. Your taxes go up 10%. Your value goes up 10%. Your taxes go up 10%.
gotcha. Okay.
But taxing authorities can change millage rates. They can add, say, MSTUs, which is a device they use to raise money, say, for beach renourishment. So it's a special taxing
like
district.
maybe St. Augustine Beach has, or
Or Summer
downtown
Haven
St.
has
Augustine.
one.
Of course,
and
Summer
there
Haven
was-
has one.
There's a special one created for the beach renourishment on South Ponte Vedra and Volano.
Yeah.
Ponte Vedra has a taxing unit in a certain part of Ponte Vedra that provides certain services to those residents. So.
I just saw that across our 42 miles of beach here, that they're going to need to replace 1.9 million cubic feet of sand, something like that. I don't know if our taxes are going to be able to cover all that sand.
Yeah, I did see basically all the sand we put on the beach got washed away
Yeah,
this
pretty
year.
much.
so-
Yeah, all these years we've just been throwing sand on it. The ocean just took it away in a month. Yeah, that's
Good
hilarious.
nor'easter gets it.
Yeah, and you've talked about the homestead exemption. Now that exemption is something that pretty much a lot of agents know about. A lot of consumers know about it as well. But that's something that almost anyone can qualify for, right? If you own a property.
Yeah, homestead exemption in Florida is you must own the property as of January 1st of the tax year. It must be your primary residence, and you must intend it to be your primary residence for the tax year.
Okay.
And evidence of that to us, if you apply, is Florida driver's license updated to that new address.
Gotcha.
And so you apply your granted homestead exemption, and as long as you maintain that as your primary residence and you don't receive a benefit in any other state, or you don't rent all or substantially all of that dwelling, then you maintain your homestead exemption and it's automatically renewed every year.
Gotcha.
So that gets you the caps,
Yeah.
and that gets you the gateway. If you qualify for other exemptions, that can get you to those.
So you need
Those
to have
exemptions.
you need to have the homestead exemption regardless.
You need to have the
So
homestead,
if you
yeah.
were, let's say, if you were an investor and you were trying to get the 65, obviously this is probably an extreme situation because if you're an investor, maybe you don't have the low income, right? But you wanted to get the 65 senior discount, right? You would have to have the homestead exemption. You'd have to have it as a
homestead.
primary residence.
Correct.
So essentially, what
Yeah.
the Property Tax Appraiser's office and maybe the Constitution of Florida is protecting homeowners, right? That are primary homeowners.
Yeah, they're protecting primary homeowners or giving a tax break to primary residents or homeowners in the state that live here, a break from the county taxation. And the 10%, especially with the values going up as fast as ours have in the last 6 years, 10% is still a pretty good cap too.
Yeah, for sure.
For non-homestead, it's not homestead, but it's
It's not 3%, but
it's still a decent cap.
yeah, for people that don't even live here,
Yeah.
So
And homestead's an important exemption. There's other legal benefits of homestead. There's legal benefits as it relates to the transfer of property between owners or spouses in the event of a death or something like that. And then there's also protection in Florida from unsecured creditors with the homestead.
Gotcha.
So your homestead is protected.
yeah, so it protects you against someone coming after your house, right? In case you're in debt of some, whatever lien is against your name.
Yeah, or there's a accident and you're sued, or some liability situation. If your home is homestead, you're protected.
So that's actually a really big benefit of.
That's a huge benefit.
Obviously not everyone's looking to get sued, but just in case, no one can take your house away. They can take everything else, but you at least still got your house.
Yeah, that's a big benefit.
That's
And then the 3% cap and the portability, actually, the legislature named that Save Our Homes. So recognizing that values in Florida increase and have for a long time, taxation could be very difficult. Literally, you could look at being taxed out of your home.
Yeah.
And so the Save Our Homes, or the 3% cap, was put into place to protect homeowners, residents against
sure.
that event.
Yeah, I mean, I know my grandparents, great grandparents bought property here in the 70s. They bought on the Intercoastal they bought 2 lots for $6,000. I think my grandma's taxes are around like $1,500. Like it's nothing. She lives right on the Intercoastal. Like it's crazy, but great for her though, right? Because she's on a fixed income.
It's her home.
She can't afford, exactly. It's her home. She can't afford that increase, because she has the limited amount of money every year. So you're going to go with 10% year over year over year over 10 years. Kicking a lot of people out of town.
Yeah, and at some point that's a good example and important to remember. At some point, if your grandmother sold that home, the new owner is going to have a significant increase in taxes.
Yeah, they're going to get slapped with taxes. That's it.
Or if that home is gifted or transferred to the estate, there will be a significant tax bill that goes along with that because homestead belongs to the owner of the home, not the property.
Yep. Gotcha. And you touched on this just a second ago too, which I think is another thing that really protects, and it's Florida looking out for the primary residents here, is portability. Could you tell me a little bit about portability?
Yeah, so portability is Save Our Homes. It's the 3% cap. And so each year, the most your taxable value can go up is 3%. So if market value goes up more than 3%, which in the last 6 years it has every year, that differential between 3% and the increase in market value goes into a deferred account. And that deferred account accumulates for the owner. You don't pay taxes on that amount. And if you relinquish your homestead exemption for any reason, you sell it or whatever, and you re-homestead another property in the state of Florida within 3 years, you get to take up to $500,000 of that portability with you to that new property to reduce the taxes on the new property. Now, the one caveat there is the property that you purchase or re-homestead has to be at least equal to or greater in value than the one that you relinquish the homestead in.
Okay.
Otherwise, it's pro rata.
Yeah,
the amount you can take with you. So portability or deferred can build up to, we have some properties in the county that have millions of dollars of deferred. But if they were to try to port or need to port, only $500,000 of that could be actually portable.
Wow. So, I guess that makes sense too, is like if you're looking to buy a smaller house, you're not going to exactly get tax savings. If your property is not worth as much as it would be. If you're paying less over here, you're not going to move to a cheaper house and pay even less.
Or avoid taxation totally by moving a port.
Which we all want to do, right?
Absolutely.
We all want to avoid taxation the best that we can.
None of us like taxes.
Yeah, exactly. That's why you're running, right?
Absolutely. People call a lot and say, I pay taxes in this county.
Yeah.
I say, so do I.
Yeah.
Just my position. I'm not exempt from taxes because I hold this position.
That's what we think, right? We see you got a beautiful suit on. You're not paying tax. Come on. So the next thing people want to know about this, right, is go a little bit into to trim and also the appeals process, if you wouldn't mind just touching on that a little bit.
Sure. Yeah. And, I want to back up just a little bit on something I missed and the importance of property taxation or ad valorem taxation and according to value is that Florida does not have a state income tax.
Yes.
And sales taxes are centrally collected and reallocated, so physically constrained counties can get additional revenue. Counties are funded by property tax. So our county administration, our fire rescue, our sheriff's department, our schools are funded by property taxes. So property taxes are very important, and it's very important that we get them right.
Yeah.
And as I said earlier, I'm the advocate for the property owner.
Yeah.
And it's very important that I get it right for the property owner. So they're not paying too many taxes or too few taxes. And by me assuring that, then I make sure the taxing authorities are getting the dollars they're supposed to get. Not more than they're supposed to get or not less than they're supposed to get. And that's one key point to remember because we don't have an income tax.
Yeah.
The other point I want to touch on briefly in homestead is that Florida also doesn't have a residency requirement, like a time period requirement.
Yeah.
Many states say you have to be in the state for 6 months or 6 months in 1 day. Because Florida doesn't have an income tax, there's no residency requirement for homestead, like time residency requirement. You have to live here.
Yeah.
It has to be your primary residence. But if you travel for 6 months out of the year, or 8 months, that's not an issue with the homestead exemption.
Which is a big deal for a lot of people because, as we know, a lot of people have a second home here, or they're snowbirds, or they're on vacation and they just want to rent it out the rest of the year, whatever that is. Obviously, if you're primary homestead, you wouldn't be able to really take advantage of the renting out situation.
We have our means.
Yeah, of course. You guys are coming after them.
Yeah.
Yeah. But that's a big deal for a lot of people because not everyone spends their entire year here, especially during the summer.
Correct.
When it's god awful hot.
Yeah,
they're heading back to where they're maybe it's Jersey or New York or Massachusetts, whoever wants to live there. But yeah, they're not exactly staying here year round.
Right. And as it relates to the appeals process, the way the appraisal and taxation process works is we start our job January 1st, and we start assessing properties. So all the new construction that's occurred the previous year, we're adding it to the tax roll.
Mm-hmm.
All the land that's been subdivided into lots, we're adding those to the tax roll. Any kind of building permit improvements that have happened over the previous year is being added to the tax roll. All the sales from the previous year have been considered, and we're starting our valuation process.
Gotcha.
And then June 1st, we submit that roll in a preliminary fashion to the Florida Department of Revenue, and we also submit it to the taxing authorities. And the taxing authorities are then using that roll information to establish their millage rates. That's the way it's supposed to work.
Yeah.
They should have already established their budgets at that point, but not necessarily. It's almost like how big's the roll so we can determine how much we're going to have.
Gotcha.
And then after that 30-day period, then we have gotten approval from the Florida Department of Revenue on the tax roll, which I think is another important point to bring out here. Our tax roll has to be approved by the Florida Department of Revenue. Okay, ours and 66 other counties. And because we're appraising in mass, it's a statistical function that we're having to meet certain statistical benchmarks and certain ratios to make sure that we are not overtaxing or undertaxing particular neighborhoods, particular areas, or that sort of thing. So if you remember from your college statistics class, if you look at one of our neighborhoods, you'll see a bell curve. Right, all the values in the neighborhood are going to go to a bell curve. So that's what we're looking for, and that's what the Florida Department of Revenue is looking for, is that the tax roll is consistent and that it's accurate through ratios. So it's submitted there. The Florida Department of Revenue then will approve that tax roll. It's called advancing, or they will approve it. And then at that point, our office moves into TRIM, or Truth and Millage.
Yep.
Truth and Millage is the most important document a property owner in the county will get for taxation this year or next year or any tax year. People tend to think the tax bill is the most important. The bill is what you pay. Truth and Millage, or TRIM, is your notice of proposed taxes. And that does a couple of things. One, the TRIM notice shows you what your values are, your proposed values. It shows you your deferred amounts, your cap amounts, if any. It shows you your exemptions, if any. And then it shows you what your taxes were last year. It shows you what your taxes will be this year if the taxing authorities approve their budgets. And then in the center column, or column 2, it shows you what your taxes will be if the taxing authorities set their millage at an amount to collect the same amount of money that they collected the previous year. And that's called the rollback rate.
Yeah.
Okay.
And that's something that when you're reading it as a consumer, I don't work for the property tax office here, I own a home here in the area. You read that and it's kind of confusing, when you're first reading that. Like, what's the rollback rate? Yeah, so go ahead, please continue on that.
It is a bit confusing, but
Yeah.
if you think about it, this is what the taxing authorities would have to charge to collect the same money they collected last year.
Yeah.
Right. The legislature did rollback for a reason. It's logical. It was hopefully that government entities would keep their budgets in line with inflation, right?
Okay.
So if inflation was neutral, you'd almost expect to go to the rollback rate, right? Because you wouldn't need more money outside of things like growth or that sort of thing. If inflation's at 5%, I would believe that the taxing authorities should keep their budgets within inflation.
Yeah.
I came from the private sector. Our budgets had to be reasonable within what it costs us to operate and what our expected or reasonable profit margins were in there.
Yeah, so it almost, in a way, kind of acts as like a benchmark, So
It almost acts like a buffer.
a buffer. Okay, yeah, better
Yeah,
way
and
for
it's
it.
a buffer if more people would understand the rollback rate. So when they look at what my taxes would be if the taxing authorities set their millage rates to collect the same money that they collected last year, and let's say that number was $2,500.
Yeah.
And they look at this year's proposed taxes and it's $3,500. Well, that's according to value, right? That means my value went up.
Yeah,
The question should be, why do they need that extra $1,000, right?
for sure.
So multiplied by 164,000 properties, and that's 170,000. I mean, that's just an example of that. So that's why the rollback's there, is to allow the counties to, especially in times like this when values are going up so high, to allow the taxing authorities to keep a lid on their I don't like to call it revenue because government doesn't get revenue. You have to work to get revenue. I like to say you sell something to get revenue.
Yeah.
It's taxes, a tax source. So that's an important number to understand. It doesn't have to be overcomplicated. Just an understanding that it's what if they wanted to get the same amount of money they got last year. That's what they would collect. So it's easy for a taxing authority to go many years and not change their millage rates and say, we never raised your taxes. But in fact, in that same period of time, like in St. Johns County, the value of your property doubled. Your taxes did get raised. Right? Because
the market
it's according to value. Yes. So that's the informational piece of the trim notice. It's very important. The other part of that is it triggers an appeal period. And that appeal period is during that trim period, which is 25 days. You can reach out to the property appraiser's office, and you can question your value. You can question your exemptions. And if the property appraiser's office, if there's an exemption that you're entitled to that's not on your trim, we're going to get that to you. If you believe we have your value wrong and your evidence shows that we have your value wrong, we're going to correct it.
So essentially, if I got the truth in
Trim.
Trim, let's say,
Truth in millage.
Truth in millage, there we go. So let's say I get my trim notice, the truth in millage notice, and I want to appeal what my taxes are, then I have that 25 days to come back. So I'm upset. What's my next step? I get this in the mail. I got the trim notice. What is my next step when I'm upset with my property taxes?
Okay. So I tell people two things. One is the information on your property is online real time every day, and we're valuing all year. So throughout the tax year, go pull up your property, look at the values, see where we are. If you have questions, you can certainly call our office anytime and ask those questions. So in trim, you see that, you disagree with it, you call our office. And our office, we're going to answer our phones, we're going to return our emails, you're going to get somebody, and we're going to talk to you.
You guys were quick with us. I mean,
if we agree,
got right back to us.
If we agree, which most times we do, we're going to make the correction, and life goes on. In the times that we just can't agree, right? In that 25-day period, you can file an appeal with the Value Adjustment Board. Okay. The Value Adjustment Board is an independent board. It's made up of 2 county commissioners, 2 school board members, and I think 2 members at large. But in our county, because we're large enough, the appeals are heard by an independent magistrate. So you file your appeal, you are scheduled a time to appear before the independent magistrate. You can do that in person, you can do it by telephone. And we go before the independent magistrate. We both exchange evidence prior. We give you our evidence of why we think it's this way. You'll show us why you think it's that way. And even though we're past trim at that point, if you've got additional evidence that we agree with, we're going to make the adjustment, but let's just assume we can't. Then you go before the magistrate, and we tell the magistrate why we think we're right, and you tell the magistrate why you think you're right, and the magistrate decides and issues a ruling, and we make the adjustment and we go forward.
So that, just how you explained it, almost seems like it can be a pretty quick process, like within 60 days almost, like because you have 25 days, then you could appeal it even more and go to the magistrate, right? So how long is that process?
Well, you got 25 days to work it out with us, which most people do. I will tell you.
Okay, that makes sense.
Every year, out of 170,000 parcels, we get less than 100 petitions from individual taxpayers.
Wow, so you guys are pretty on the money then, essentially.
Big companies will use agents, so we'll get more from agents, tax agents, but even then we get less than 1,000 petitions every year. Yeah. So during that period, when you appeal, now your hearing may not be set till November or December. It's based on the timing of the magistrates, but in any case, in our county, you're most likely going to be finished by the middle of January of the next year. The ruling is going to be issued, and if we have to make a change, we're going to correct your tax bill. Yeah. Or we'll do a correction. The tax collector will correct your tax bill and mail that out to you. Honestly, we don't like to get there. If there's a dispute, if it's an exemption issue,
no one wants to go there.
That's statutory.
Yeah.
You either qualify or you don't. I have no discretion in granting you an exemption. The statutes tell me how to do that.
Unless it's your neighbor that you hate, then you're like, no, Joe, I'm not.
I try not to even let my neighbors know what I do.
Yeah, that's honestly probably the best thing. They'd be like, hey, Joe, I got this problem, Eddie. What do you want to do about it,
Valuation, obviously an appraisal is an opinion of value.
Yeah.
And, our way our office operates, you have your opinion, we have our opinion. If we're both reasonable, there's somewhere to meet in the middle. We don't want to put you through going through the VAB and taking your time. And
so in a way, it's almost like kind of like a negotiation, because you're not trying. You guys aren't even trying to go over there, because this is what your outline of what we think the property is going to be taxed at, right? And this is what you think. Hey, we're not too far off. Why not meet in the middle? Is that something that happens? Well, I know you said it's only 100 properties.
Yeah, I don't want it to sound like a negotiation. So if it's a residential property, what we're going to say is, here's the value of your property, and we have 3 sales that occurred around your property, comparable sales that's we think we're right.
Yeah.
You may come in and say, well, I have those same 3 sales, but I have another one, or I have 2 sales, but I have another one, and we look at that sale and say, well, that's a reasonable sale. We could have used that sale. So it makes sense to adjust it. Or many times people will come in and they've retained a fee appraiser, and then that one particular property is appraised, for fee simple type. And we'll look at the fee appraisal, we'll review it. If it meets standards, then we'll adjust the value.
Okay.
So it's not a negotiation. It's if you have, again, appraisal is not a hard mathematical science.
Yeah.
And so if we have evidence to the contrary, we'll make the adjustment.
Okay. Very cool. Very cool.
Yeah. Our tax roll this year is about $74 billion. So there's
pretty significant
it's
amount
pretty
of money.
Significant.
Yeah. So what I know things have changed here pretty drastically over these last couple of years. A big thing that we've seen is the budget for St. Johns County and what they're looking to put forward. I think they got up to 1.5 billion. I think I'm correct with that number.
I believe so. That was this year's budget.
And a big part of that is property tax revenue, right?
Property ad valorem tax revenue to the county, interestingly enough, is around the $270 million. Part of that is ad valorem. The other parts of that are fees, the share of guest taxes, the share of sales taxes, grants from entities like FEMA, grants from Human Services, Health and Human Services. So actually ad valorem is the smaller part of the budget.
Yeah.
But the county operations, if you will, fire rescue, sheriff's department, those things are funded from ad valorem taxes.
Yeah, so directly from property taxes. Okay.
Yeah.
Gotcha. Wow. Yeah, that's pretty interesting there. So one of the main questions that you get is dealing with realtors, really. Well, one of the main problems that you have is dealing with realtors and educating their clients. Now, because that's when someone's calling you, they're saying, hey, why did my taxes double this year? What would you tell realtors, the conversations that they need to be having with their customers about the property tax evaluation process?
Yeah, the first thing I would ask all realtors to do is tell your customer to call our office.
Yeah, that's the best way.
Absolutely.
Honestly.
You can give them my direct phone number. You can give them our office number. You can give them our emails. We're going to respond. We're going to respond the same day.
Yeah.
And we'll answer their question. I mean, if you're going to buy the house, you're going to ask, what are you going to pay for it? Where's it at? And we'll give them a good idea what their taxes are going to be and how they're going to change. If they have questions in advance about an exemption, call us. I mean, realtors have an important job, and there's a lot of things you guys have to do because you have regulations on how you disclose and how your sales contracts work and all those things. And if you can be, really attuned to how the property taxation is going to work, that's great.
Yeah.
But many times that's not the primary thing that you should be focused on for your client. And so we say, give them our number, our emails, and we'll answer those questions for them.
Yeah, and as a local realtor here, I think it's pretty amazing that some counties don't have this, but just having that property tax estimator online makes it so simple. And it even breaks it down to, like, I know we talked a little bit about like how downtown St. Augustine, how St. Augustine Beach, they have different millage rates than the rest of the county, right? So you can go in there and you can get a pretty good idea of what your taxes are going to be based off of your just market value. And that's not even talking to anyone, right?
Right. And the way our tax estimator works, the current millage rates are preloaded into it.
Yeah.
The exemption values are preloaded into it. If you're bringing a homestead port with you, and you can certainly look on the website from the county you're coming from or our website and get an estimate of what that port's going to be, then you can plug all that in and you're going to be very close on what your taxes are going to be for the
At least not
following year.
$3,000 off.
No, absolutely. And the other
Yeah.
thing I tell people when I speak with them is, remember, if you're in a CDD, and our county has a number of CDDs, the CDD fees are considered non-ad valorem. They're not according to value.
Yep.
They're fixed by the district, so that's not in our estimator, right? So if you thought your taxes were going to be $3,000, and you may have been right, but you didn't realize you had a $3,000 CDD fee, that's not going to be in our estimator.
Yeah.
But our website also has a link to the tax bill. So you could look at the previous year's tax bill, and if there's a CDD fee, you can see it on the tax bill and what it was in that previous year.
Gotcha. Okay. And then I know we talked about millage rates a little bit. Can you break down, county millage rates versus city millage rates, and like what adds that all up to be your property tax bill, right?
Sure.
So what would be the difference of living in, why is downtown St. Augustine almost 2% in taxes versus the county, most of the area in the county is around 1.3, 1.4% of taxes of your property value? Could you go into that a little bit?
Sure. And in our county, there are a number of taxing authorities. Okay, so there's St. Johns County is a taxing authority. The school system is a taxing authority. City of St. Augustine. Then there's St. John's River Water Management District, Mosquito Control, Florida Inland Navigation. There are a number of those different taxing authorities. They each have a millage that they apply to get to the total. So in general, the primary taxing authorities, if you live in the county, are St. Johns County and the school system.
Gotcha.
Those are the large ones.
Main one you need to worry about.
Yeah, and so if you're not in the city of St. Augustine or the city of St. Augustine Beach, you're going to be just under 14 mills, or 1.4%.
Yeah.
And that's made up of what the county millage is and what the school board millage is, and then those other taxing authorities, which usually have very low relative millage rates.
Yeah.
So if you go into the city of St. Augustine, for instance, because they are an independent entity government-wise, and they also provide police, fire rescue.
Just for the city.
Yeah,
just
just
for
for the
that
city.
like downtown
Correct.
historic, pretty much that surrounding area.
There's the St. Augustine City Police, the St. Augustine Fire Department. They have their own water sewer department, which is kind of a duplicate services, so they impose their own millage. The city of St. Augustine is roughly 5 mills. I don't have that in front of me. So while you may pay 14 mills or 1.4% in the general county, if you live in the city of St. Augustine, that's going to be 19 mills or 1.9%.
Yeah.
And you're paying for those additional services that are being offered by the city.
Yeah, gotcha. And that's basically like the stormwater management, the lights downtown, night of lights. I'm sure that's probably part of the budget there for the people living there. And that 5%, that 5 points in millage rate, I imagine a lot, maybe 1 point of that goes to the
Yeah,
night
and
of
when
lights.
you dial 911, I mean, if you're in the city, you're probably going to get a city responder as opposed to a county responder.
Yeah. Okay. Yeah. And this is something I've seen talked about. And we mentioned the mosquito control tax, right? I've heard that St. Johns County is going to get its own mosquito museum. Have you heard about that?
I've heard rumors of that,
Yeah,
actually. Actually, I didn't hear rumors. I actually saw an ad or article in the paper that they were going to get they were considering, I don't know where that is in the process, but they were considering a mosquito museum.
Yeah, and just as a person living here in the county, I feel like we could put $1 million in a lot of other better places than a mosquito museum. What are your thoughts on that?
I actually believe it was $3 million.
$3 million. Okay, I'm off then. Yeah, there we go.
I personally was not excited
Yeah.
about a mosquito museum and did not think it was something that I would probably
Not
support.
necessarily the tourist attraction that you would think for our area, or so, I don't know where it came from. Maybe I'm just ignorant on it of why it's important to have a mosquito museum, but I figured you might have a little more insight to that, but I think we're on the same wavelength.
Yeah, I don't think you're ignorant on it. I
Okay.
think government has a purpose.
Yeah.
And government has a purpose to provide services to its citizens.
Mm-hmm.
Museums are appropriate sometimes.
Yeah.
In governmental units, historical museums, I think you are stretching.
Oh, yeah.
When you begin to do that thing. I mean, how would you feel if I said, you know what, Thomas, I think we're going to build a property appraiser museum, and it's only going to be $3 million.
It's going to be your face on it.
Yeah, absolutely.
Right?
It's
Only $3 million.
What is the thing on, is it Sunday Night Football or Monday Night Football? Like, come on, man. It's
Yeah.
like, come on, man.
Yeah, exactly. Yep, exactly.
Yeah. And I think many times in business, in banking, every day, every week, every month, every customer, you're rethinking how you do things. You're having to stay competitive because you're only as good as your next deal or your next customer or your next competitor. Government doesn't always think like that. Something gets said in government, and it's like, we've always done it, so we can't change it, we can't look at it. But I think questions you need to start asking questions, and the population, the public, the taxpayers need to ask questions.
Yeah.
When you look at those taxing authorities on your trim notice, and there's 8 or 9 or 10 of them, I think we should start asking the question, what do they do?
Yeah, where is this money going?
Yeah. Why, when they were formed ever how long ago, probably had a real purpose. But now, things have changed. We don't put troughs on the road for horses to drink water out of anymore.
Yeah.
So maybe we should relook at that and say, do we really need that anymore?
Yeah, for sure.
Is that something is that a service we really need?
Yeah, and that's something that it's hard to, as someone just living here in the county, taxpayer, right? You got your own thing going on, right? You got your job, you got your wife, you got your kids, but all that kind of stuff. How do you stay up to date with what all these people, what's the county using our money for? Where's it going? And that's also something that I wanted to talk about too. As you know, we have a $500 million backlog on the books for St. Johns County. And one of the big things they talked about before was, and we had a vote on it in November, was raising sales taxes to combat that. And that got voted down in November. So what do you think would be the best way to pay for that? Now, I've also done a little more research where apparently for the impact fees, we're at the highest that we can be for the county in terms of charging the builders that are developing these large developments in the area. So where else can we get that money? Is it coming from our property taxes soon?
Well, I mean, I would argue, and this is my opinion, so take it for what it's worth. Property taxes generate a lot of revenue.
Yeah.
And property taxes alone, in just my term, are generating over $100 million a year more than they were 6 years ago.
Wow.
All right. So if I look at the roll in 2017 and I look at the roll in 2022, there's over $100 million more being generated from property taxes.
Yeah.
Now, I look at that two ways. One, that's a tax increase, because you and I, if we own property, we're paying more in taxes. But two, if I do that over 10 years, that's $1.2 billion, right? And that's without consideration of this year the tax roll is going to be up another 20 or 25%. So that's without consideration of growth. So if I look at that from 40,000 feet, I would say, well, the revenue's coming in to fund that, right?
Yeah.
Because what changed dramatically from 2017 to 2022 that would have consumed $1.2 billion.
Yeah. Yeah. And I think in that time, I could be wrong on this, so correct me if I'm wrong. I think it's in the past 5 years, property values have gone up around 60%. I think that is in our area, something like that. Am I wrong?
Well, the tax roll's gone up 120%.
Okay, so yeah,
different areas have gone up different amounts.
Of course.
But yeah, just market value is up about 120% during that same period of time. Now, there's two parts to that, right? One is your property value just went up.
Yeah.
The other part of that is, 5,000 acres of timberland is now so many lots, individual
sure.
lots. So,
Yeah.
and then the third part of that is new construction that gets added to the roll. So last year we added $1.7 billion in new construction to the tax roll.
Wow.
And that's properties that were completed. So there's when I say property increase or value increase, I talk about tax roll increase. Individual houses that were here 5 years ago, maybe it is 60%.
Yeah. Okay.
That would sound fair. Now we have some neighborhoods right now, year over year, sales that are up 60%.
Yeah, I know. It's
crazy.
It's crazy. Well, and
there's some very, still very strong neighborhoods, markets within our county.
And it's a scarcity factor here too, because there's certain building codes. You can't build over 3 feet in the majority of St. Augustine, right? So, or 3 feet, 3 stories. My mistake. Yeah, 3 feet. We're living in a tiny world, but yeah, 3 stories high. So the population density for those areas are only so much. On top of that, you have neighbors that, hey, you want to build a multifamily behind my single family house that's worth $600,000? I'll pass. And that's normally what it comes down to, is the neighbors not essentially wanting the development to come in, and even bringing more tax incentives or tax revenue into the county. But essentially what you're saying is that the tax revenue that we're getting is more than enough from property taxes.
I would think so.
Yeah.
Yeah, and I think, and let me caveat this by saying, I think St. Johns County, we have a very good government. Our county administration, our schools, obviously, this is a well-run government.
For sure.
But you can always be better. You can always be more efficient, and you always have to be asking that question every morning when you get up and come in, because you have a responsibility to the people who are paying those bills. You have a responsibility to your employees, and you have a responsibility to your customers, which in government, your customers are the taxpayers.
Yeah.
So, I think there are a lot of avenues you could look at before you increase taxes, because taxes have increased just because values have increased.
Yeah.
And, in the private sector, when we needed to invest in a capital asset, we budgeted that capital asset, and we figured out how we were going to get the revenue for that capital asset, and we got our boards to approve that, and we moved forward with it. So you didn't necessarily get behind. And if you got behind, if you really did get behind, somebody was asking the question, why?
Yeah.
How? I mean, how did you get behind in this? How did you let this get behind before asking sooner?
Yeah.
Or that sort of thing. And so I just think, while we have an excellent governmental system here, we continue to we're responsible to ask questions.
For sure,
right?
yeah.
We can't take everything at face value. We have to ask questions. Why are we behind? Why is this happening? What should we do? What are we doing with this? And, how could we do this different?
Yeah, how can we do it better and more efficient? And I think that's the problem, is when people are looking like, man, I'm getting taxed through the nose here for, this, and that. You see all the money that St. Johns County is getting. We just want to know that the money's being used appropriately, right? It's not just going to line someone's pockets that maybe is getting paid from a developer. Who knows? That's another big thing people say, is all the county commissions getting paid by developers to allow all this development to happen. What do you...
Well, and I think we have to keep in mind, too, I think it's just it is an easy thing to say developer.
Oh, yeah.
A developer, first of all, in the United States, we're a free country, and many of our rights are based upon property ownership. And there's a fundamental. When you own property, you have a right to do what you want to with your property without government interference.
For sure.
So I look at the people who are developing and building. I don't call them developers. I call them entrepreneurs. I call them business people.
Yeah.
They are making something. They're paying wages. They're paying taxes. They're creating jobs. They're providing housing that we need. I don't see that ultimately as a bad thing, because it is their land, and they get to use it.
Yep.
Now, there's a concept in our government. If you own a piece of land, and I tell you, if I'm the government and I tell you you can't use it, I have to buy it from you.
Yeah.
Right? Eminent domain. I have to buy it from you. We don't want to go down that road. I think there's a balance between that, and the balance goes to density and numbers of units and speed in which you build those units and that sort of thing. And that's the kind of thing that has to be looked at, I think, and managed better.
Yeah.
Our builders in this county do an outstanding job. If you go drive through Nocatee or Silverleaf or Rivertown or Palencia, these are
Beautiful neighborhoods.
world-class communities. And
Yeah.
these guys have done excellent jobs in developing that out. So,
And that's something that I feel like people come to our area and they drive through these neighborhoods and they're like in a la land. They don't even understand. They're like, this Nocatee, this place, it's got a water park and it's got manicured streets and it's 26 square miles. Like,
that's why people want to live here.
exactly.
Right?
Yeah. Now, we talked about development a little bit. And one of the main things that I hear from the locals, and I know you've lived here for a good bit, is are we overdeveloping? Now, personally, myself, I don't think so. I think we still need to build more houses because the cost of housing is still sky high here. But I'd love to hear what you think as the main man at the Property Tax Appraiser's office.
No, I mean, I don't think we're overdeveloping. I mean, the people who develop, the entrepreneurs that develop, they do it because there's a demand for the product, right?
And there's an ROI. Yeah.
Right. The reason a homeowner, Home Depot builds a new store is there's a demand for the product,
Yep.
right? And so there's a demand for the product. People want to move here. So I don't think it's a question of are we overdeveloping? It's a question of how do we manage that development?
How's the development going?
Right.
Yeah.
And as a government, how do we foster that? Because it's creating, jobs.
Yeah.
It's creating a tax base because not only does it create property tax, but when they pay wages, the wages are spent on goods and services, which pay sales taxes. So I think that's important.
For sure. Yeah.
Again, the little town I grew up in, 5,000 today. There's a reason folks don't move there.
Yeah.
Right.
You put one store in there and people are, what is going on? This is crazy.
Yeah.
You're changing the town.
Yeah.
And that's what's, I lived here, I moved here in 98 and I lived here till 2005. And for the most part, this town didn't change that much. I was a kid, of course, but I would say it was about the same. If you wanted fried shrimp, you could always get it. Some good seafood, you always get it. I feel like the change of our town now is it's a different town 100% than it was 10 years ago. But in so many, obviously people look at the population, the traffic, and they say, oh, that's the negatives. But all the positives there, right? There's so much more positives to how our town's changed in these past 10 years than there are negatives, in my opinion, as a local.
Well, I would agree. The positives, the health care that we enjoy now, the ease of transportation that we enjoy now, there's lots of positives to that. But it's not just our town that's changed. The state of Florida has changed.
100%.
Florida grows. People want to come to Florida to live.
Yep.
It's obviously the climate's really good here. The tax scheme is very good here. Education is very good here. It's December 9th, and it's 80 degrees outside and the sun's shining. I mean, people want to move here, and I think the pandemic multiplied that.
Yeah.
Because you could work from home now.
Yep.
And so you can kind of live wherever you wanted to live. So where do you want to live?
Why not live in St. Johns County?
Well,
Kids go to good schools.
Yeah, when you look at Florida and you start looking around, you look at St. Johns County, we have great schools.
Yeah.
We have the Atlantic Ocean, we have the Intercoastal, we have the St. Johns River, we have very close proximity to Jacksonville, Daytona, and Orlando.
Yep. Disney World.
We have very good infrastructure as far as internet services and communication services, tremendous health care.
Hospitals going up everywhere, too.
It's going to happen, so let's manage how it happens.
Yeah.
Let's encourage it.
I agree. And that's the thing is people are going to move here, right? So what are we doing about that, right? So the option is not to develop, right? So we don't develop anything. What happens to housing prices? What happens to taxes? They're all going to go up, right?
Yeah.
Because the scarcity. There's no homes available for these people to live in. A lot of people that I grew up with in this town, they had to move out of St. Johns County, because they can't afford it. Especially, they're around my age. They're around 30 years old. Being an entry-level buyer, buying pretty much the cheapest thing in town now. If you're looking for a single-family home, low 300s, high 200s, whereas before the pandemic, that was mid 100s, low 200s pretty easily, and obviously different interest rates too. So it's a big factor. Do you have anything else that you would want to just get the message out to people that are living here in St. Johns County, people that are considering moving here to St. Johns County? Anything else any type of advice or tips that you could give them? Maybe that they should work with me. I don't know, but anything that you might have.
You know, I think the message I would give them, as it relates to property taxation, which is what we do.
Yes, sir.
If you have questions about that, if you have questions about your value, if you have questions about what your value is going to be next year, what's going to happen to the value, call our office.
Yeah.
We're going to answer our phones. We return our email. You're going to hear back from us, and we're going to give you an answer in that. I publish my direct number. I publish my email address. I answer my phone. I return my emails.
Yep.
So we're going to make sure you get an answer, so you won't be surprised. We need you to be educated. We need you to understand how things work. You know, so many times somebody will call and say, well, someone told me, or my neighbor said, and it's like don't rely on that. We come here, we will tell you the right answer as it relates to property taxation, and you won't have to guess, and you won't be surprised.
Yeah, straight from the source, Yeah. You're not getting it from me over here is going to give you, you know what, I just tell people, hey, check out the county website. It's got it on there. I can give you estimates, but if you really want to know, you got to call these guys.
And absolutely remember, if you're purchasing a house this year, this year's taxes belong to the previous owner. Next year, it's going to be taxed based on your ownership, the new values, any exemptions that you had. It is going to change.
Yeah.
One thing we ran into this year, which was a huge question, is someone had planned 4 or 5 years ago they were going to retire to Florida, so they came to St. Augustine. They liked it. They bought a home. And so they just kept it for their retirement. Well, every year the value went up 25, 30%, and they had the 10% cap on that.
Yeah.
So this year they decided they retired, and they're moving here permanently, and they come in and apply for homestead. When you apply for homestead, that's a change in use of the property. So your old caps come off, even though you still own it.
Gotcha.
And then the first year of homestead becomes your base year for homestead. So
it's almost like you're based off of the market value then.
Well, and eliminating any of the 10% cap that you had before.
Ooh, so for an uneducated person such as this person you're talking about, they could have just left it and their taxes might have been less.
First time in my tenure at the property appraiser's office, we had people decide this year not to homestead because it would have cost so much money the first year when the non-homestead cap came off. Now, we explained to them there's a 3% cap going forward. There's other protections, but that's a financial decision they have to make, and it could be, it's a tough decision that year one, but it is, as they say, it is what it is.
And it's all based off of value, right? So it's not like you're coming up and saying, hey, it's going to be a 10%. If you're not homestead, it's going to be a 10% increase this year regardless. It could be less than that.
It's all based on value.
Just based on value,
absolutely.
Right? So if it actually goes down, your taxes could technically go down?
Could technically go down, but one thing to keep in mind there is once you build that assessment cap differential, okay, whether it's homestead or non-homestead, if your value comes down, it comes out of the cap first.
Okay.
So if your just market value is $500,000 and your assessed value is $400,000, then that means you have $100,000 in cap.
Gotcha.
If your value comes down to $550,000, your just value comes down to $450,000, your cap's going to come down to $50,000. Your assessed value is still going to be $400,000 because declines in market value come out of the cap first.
Gotcha. Okay. So it technically could, but you have to bridge the gap essentially.
Yeah, which is the other thing I tell our taxing authorities, and they say, well, what if values start to drop? Well, initially, unless they drop dramatically, it's not going to lower the tax base because it comes out of the caps first. And same way with an individual property owner, it comes out of your cap first.
Yeah. And that's one thing, the concerns with property taxes that I have is that a lot of agents aren't explaining and it's not necessarily our job to do so, but to explain the taxes of how they're paid in arrears and how they're assessed, and that they're getting hit with these, like you said, the number one question you hear is like, why did my taxes double? And that's because they weren't thoroughly explained the situation, right? So it makes it difficult for them. And how do they fight those taxes? How do they make it to where it's comfortable for their payment? That's really a hard thing for people to wrap their head around, right? And I think the education just needs to be, it's obviously there, it's out there, and it's for people there, but getting in front of people and understanding it's a different thing.
Yeah, in our office, we will come out anywhere at almost any time and do presentations. We go to homeowners associations, we go to realtors' offices and talk through how this process works. Our office does outreach. Every year, the first 3 months, we go into communities and take homestead exemption applications in the community.
Yeah.
Anytime we can get out and present and educate about what we do, we're going to take that opportunity, because whether you're appraising and establishing property tax rates, or whether you're looking at a sales tax, the best way to accomplish what you want to accomplish is to tell people what you're trying to accomplish, why you're trying to accomplish it, and educate them on that, as
100%.
opposed to letting there be a question about that.
Okay. And then I know and we can end it here in a little bit, but I know you can pay your taxes early, and that allows you to get a discount, correct?
Correct.
So what are those discounts, and why do you give a discount? Are we just incentivized? Like, hey, you know what? You want to pay a couple months early? We'll give you a couple percentage off, or is there a reason?
Yeah, I think there's, I won't speak. This would probably be a question for the legislature to answer. The tax collector, in the bank, if I wanted you to do something, I incented you financially. So I'm guessing that to get you to pay early, the funds are already in, then I give you a discount.
Yeah.
So the tax bills are mailed November 1st. If you pay it in November, it's a 4% discount.
Yeah.
If you pay it in December, it's 3%. January 2%, February 1%. The full rate's due in March, and then the taxes technically become delinquent April 1st.
Yeah. Okay.
Or due, if you will, April 1st.
Gotcha. Well, Eddie, I want to thank you so much for being here today. I feel like I've gained so much knowledge, and I hope you guys have gained a little bit of knowledge from Eddie here. If you do have any questions about property taxes, he's going to be the main guy to reach out to their office. Eddie, what are some ways that people can get in contact with you?
Thomas, first of all, it's a pleasure for us to do this, and thank you for taking the time to let us get the information. You can reach our office by dialing 827-5500. That's the main number. You can reach me by dialing 827-5520. That's my direct number.
Area code 904?
904,
Yeah.
obviously. Our website is www.sjcpa.us. All of our information is on the website. This is public information. This is government. We are totally transparent with what we can be transparent with, which is basically everything except Social Security numbers. So we push that to our website. All valuation, all exemption information is on the website. So I encourage people to use that. They can apply for exemptions on the website. They can email us through the website. But always you can call our office, and we're going to talk to you.
Awesome. Thank you so much, Eddie. I appreciate it. And hopefully we do this again. This was fun.
Thank you. Be our pleasure. We'll do it anytime.
That sounds good.